here, and Claire from the South Wimbledon business area. So obviously we've got this communication going out through their business networks. Also welcome to Sarah from the council's team. Sarah is working day and night, I should think, with the team there to try and get to grips with what comes out from government. And as we know, during lockdown, the information has been coming swiftly and in volumes. So the council team actually don't get the information much before the rest of us, if at all. So they also then have to digest and work out the council's responsibilities, which a lot of, as we know, the responsibilities do sit with the council. I think the context of today is obviously it's 4 months till lockdown. It's been a challenging road for most people, and indeed for some people still is, because they essentially can't reopen. But we are now in what is called the recovery phase, and we know that there are many businesses that have been able to open in the past 2 to 3 weeks, and really having to focus in terms of making sure that they are COVID compliant, which is a very, very big task and a very costly task actually. And we also know that businesses that are, if you like, public, open to the public, really can't trade at the 100% that they need to bring their revenues back in. Some of them are probably trading, if they're lucky, at 60%, some of them trading at 30%, which isn't a viable option. So it's a very, very tricky journey. So what we wanted to do today, we're very pleased to welcome Julian Upson, the partner of Hartley Fowler Chartered Accountants. His partner, Jonathan Askew, is also in the audience. We're very pleased that they are patron members of the Chamber. And Julian's going to give us some practical advice and examples on really how we can look to navigate our way out of lockdown. We've obviously got changes to the furlough scheme coming in from the 1st of August. There's no sign of any further financial support from government at the moment. We don't know what they would do if there was a local lockdown, for example. And really just looking at how we as businesses put in place future-proofing strategies in this really uncertain climate. So that's my introduction to Julian. I will pass over to him in a minute, and we will take Q&As and have a discussion afterwards. So over to you, Julian. Welcome.
Good morning. I had a look at all this, and I thought the best place to start really is just a bit of background on me and Hartley Fowler. So I'm a partner in Hartley Fowler in Wimbledon. We've got another office in Brighton, and we employ about 50 staff. So we've dealt with everything to do with where we are ourselves and for our clients. And I've been in the business in Hartley Fowler since 1982, believe it or not. And I thought I'd seen everything. I thought I'd seen everything that could possibly happen, but I was wrong, because no one could have predicted where we are today and what effect it's had on the economy and people's businesses. With, I think it was last count, 9 million people on the furlough scheme. You know, incredible amount of money. The GDP's gone, or whatever it is, the growth has gone minus 25%, which is 18 years growth wiped out in 4 months. So it's very, very challenging times for people. And obviously some essential, necessary businesses have probably done quite well out of it. Food, health, manufacturing things for COVID, for all the equipment and everything. Delivery, I was reading somewhere that I think DPD is the big delivery company. You know, they're 50% more trucks on the road than they had before this all started, because obviously no one, or lots of people, aren't going shopping. They're doing everything online. But of course, then there's another vast swathe of businesses that have experienced immense shock to their activities. You know, some businesses, as we know, the pubs, the retail trade, everything just shut. I've got a client with a picture framing shop and a gallery in the centre of London in Baker Street, and literally he was forced just to pull the shutters down and close, and had no income at all. He negotiated with his landlord for for some rent holidays, which he got, and some actual rent reductions, which he got, and they've opened again. And surprisingly, they've been reasonably busy, but it's only the bosses that have gone back to work. So it's just a small business, husband and wife team. They had 3 people working for them. Those 3 people are still on furlough. And at the moment, will they ever go back to work until the activity increases a lot? If you look at Baker Street and you went up there, you can see they've changed the whole road systems to allow people to queue up to go down the tube. So there's less traffic flow, loads of one-way systems. Everyone's saying it's taking longer and longer to drive anywhere because I think they're making the roads a bit more friendly for people. But COVID's really had major issues on people with profitability and cash flow. I mean, that's where the key was done. We were all obviously allowed not to pay our VAT for 1 quarter, which of course people mustn't forget that they've got to pay that on the 31st of March next year. People are allowed to postpone their self-assessment payments. So if anyone, and you don't have to be self-employed to do this, if anyone has a 31st of July tax payment to make, they don't have to make it. But the statements that are coming out from the revenue actually say due on the 31st of January 2021 now. That's what the actual paperwork says. When they were first coming out, they were saying due 31st of July, but you could postpone it. Now the statements are just coming out with a payment date. People are still paying it. Some of our clients have said, well, I might as well pay it now as to wait because I've just got to pay it in January. But it has helped. So when we get into next year, the beginning of next year, I think is going to be absolutely critical for people because they're going to have all this debt and going to have to start paying it off. I mean, and the VAT that people haven't paid is quite immense. So I think we've all got to look at our businesses and we've got to look at what we can do to actually make sure we are all as good as we were, as profitable as we were, as nice as we were, as nice to work for as we were before all of this kicked off. And I think that, one of the things that, we should look at is innovation, be creative, be agile, work out what new things we could do in the electronic environment that we're clearly moving more and more towards, which will involve the use of technology and sensibly using it. We've got to have, no accountant would not say this, everyone should have a proper business plan. And I think the cash flow has got to be, we do ours on a daily basis now, the cash flow has got to be on a rolling basis. You've got to know what's coming in, what's going out. You've got to control your costs. I think everyone should review their expenditure in their accounts and see if there's anything that they could just say put on hold, not pay for the next period. I remember the 90s recession when I was heard to say in the middle of Hartley Fowler, I think we were in Wimbledon, to stand in the middle of the office and say, right, we're not spending anything. We're not buying paper, we're not buying pens, we're not doing this, we're not doing, and I know that doesn't help other businesses, but it meant that, we were okay. We didn't have to spend unnecessary money. Profit margins, some businesses are going to be under immense pressure. I think people will be buying work, but I think if you explain to your clients the service that you're giving, and because of where you are, and to provide that service, maybe you've got to charge a bit more. Maybe some clients would understand it, and be supportive. The VAT change, obviously, on restaurants down to 5% and whatever, on most things apart from booze, of course. The restaurants don't have to pass that on to the customers, and I think the customers would probably be quite happy for the restaurants to keep the VAT saving. And I think one of the major things that have come out of all of this is we've got to work out some decent systems, and as businesses, as smaller businesses, because we're all smaller businesses really, of managing our staff working from home. You know, how do you communicate? How do you get? I mean, we're obviously a professional company. We're doing people's accounts, people's audits, people's tax returns, and we've got our staff to email the managers to say at the end of the day, you know, what they've done, what work they've done, what they need if they're running out of work, and that's working quite well, because all our staff, I think, apart from one, yeah, that's our you know, they're all back from furlough. No one's on furlough anymore, so we're quite busy. But and then the Chancellor obviously got up on the 8th of July and announced some minor measures, I think I would call them, for helping businesses. So there's the job retention bonus that will give anyone that still has people that were on furlough in the past, if they have them on the payroll the 31st of January, they get £1,000 per member of staff. There's some extra money available and payments available for taking on apprenticeships and doing this sort of thing. So trying to get the youngsters into work. Obviously, the cut in the VAT to 5% I've already mentioned in the leisure industry, and the stamp duty threshold on purchasing properties has increased to £500,000, which means, you know, if anyone was buying a £500,000 property, they would save, if it was their only property or their principal private residence, they would save £15,000. If it was a second property, they'd still save £15,000, but they would still have to pay the 3% surcharge for having a second property. And the eat out voucher, which I think means you can go and eat out and get 50% back up to £10, I think, from restaurants. And obviously, I guess Love Wimbledon will be able to tell us what restaurants are participating in that scheme, because they get the money back from the government and it's just treated like takings by them and with VAT on and everything. And I read a little survey where I think this business is sort of concentrating on getting people back to work, and there are just a couple of sort of, I don't think it is surprising, but it's worth. They reckon that 58% of businesses expect to see the return of half of their staff in the quarter to December. So between September and December, they expect to have half of their staff back in the business. I mean, out of interest, we've probably got about half of our staff working in the office because we can't really get more than half in. So, and that's part of an issue. Sorry, that's not my phone. That's my personal landline, which I just get rid of. And sorry about that. And 65% of businesses believe it's not ideal to have staff working at home, but only 28% of staff feel comfortable returning to work. So there's a challenge, I think, to make people comfortable about coming back to the office. And we've already had some issues with, you know, travelling and people. And I've got everyone car parking spaces in Centre Court and spoke to the people that manage that, so that the lads and lasses that are coming back can park and don't have to use public transport, because the next bit of this says that public transport is a barrier for people, and over 83% of the people coming back or coming to work have to commute for more than 30 minutes. So with all this, you know, if you get on a bus, you've got to wear a mask, and this is people don't like, I think. And then just to finish off, there's so we don't miss any dates and things that are happening, and make sure that we as businesses claim everything we possibly can from these schemes and whatever. I mean, the 31st of July is the final day to submit claims for the job retention scheme, the period ending on the 30th of June. You don't have to pay, as I've already mentioned, 31st of July, you normally have to pay your second payment on account, but you don't need to do that. You can leave that till January 21, but don't forget you've got to pay it. The government, for August, they're going to continue to pay 80% of the wages up to the £2,500. However, as employers, we will now be responsible for the national insurance and the pension contributions that we weren't responsible for on the, let's call it the old scheme. And obviously you can do part-time furlough as well now, which was only really came in on the 1st of July, I think the part-time one came in, yeah. So, and that seems to be very, very flexible. You know, someone could just work 1 day a week for the business and be furloughed for 4 days. And you pay their one day at their proper rate of pay, and you either pay the rest at their proper rate of pay and get 80% back from the government, or you reduce theirs to 80%. Then from the 1st of September, the furlough is going down to 70% of the wages, and obviously the cap is 218,750 just by maths, and then I think from the 1st of October it's going down to 60%, and then obviously it ends at the end of October. So furlough is, at the moment, you know, what we have seen is you plan for something, you read the rules, and then you get up tomorrow morning and the rules have changed. I mean, it's an ever-moving feast, you know. You could have a whole new subject about what do we think is going to happen to tax rates. You know, should people actually be, you know, anyway, that's another day, isn't it? The final day you can get a bounce back loan or the other types of loans is the 4th of November. I don't know where that deadline comes from, but it's the 4th of November. And the final day you can make any furlough claims is the 30th of November. And obviously the nasty days are the 31st of January 21, where you've got to pay your deferred tax payment from the 31st of July plus your whatever's due in January. So it'd be like paying you three lots of tax, I think, in January, really. And obviously the VAT payment that's anyone's deferred for the March to June quarter is due on the 31st of March 2020. There's nothing to stop people paying, you know, some of it as they go along. They don't have to wait till the 31st of March 2021 to pay it. But at the moment, it's obviously interest-free money. What someone did say to me the other day was, which I hadn't thought about, was obviously when we do a set of accounts to say the 31st of December 2020, all these liabilities are sitting in the accounts as debt, as money owed to the Inland Revenue. You've got to watch your bank covenants to make sure you don't breach any loan agreements that you have with the banks, because people probably haven't thought about that. I hadn't thought about that, and we haven't done any accounts, obviously, with these liabilities in yet. So I hope that was useful. If you want any questions, you can just ask them, really.
Thank you, Julian, and I'm sure we will have some questions. I mean, cash is king, isn't it? The cash is, that's always an accountant's speak anyway, cash is king. But cash is king more now than ever. And the one thing that businesses don't have is cash. So somehow they've got to navigate their way through the next 6 to 12 months with all these payments that have got to be paid out, balancing that with revenues coming in, haven't they? Hopefully. Yep. So that's my take on that.
I mean, obviously, if people believe in their business and they've got cash outside their business, they'll invest in their own business.
Yeah.
You know, like Hartley Fowler have effectively. You know, you just take less out, don't you?
Mm-hmm.
You take less money out of the business than you'd normally take. We must tell the staff we've done that, John. Maybe as this is recorded, they'll listen to it and they'll pick it up from there. So
made that very clear. Yeah, I mean we didn't reduce any of our staff's pay, so you know. So, but it's just having. I think, you know, if you just looked at our business, the cash flow is fine until, you know,
you get to these dates next year where you've got to make sure that you've retained enough money to pay these debts. I mean, I don't know what would happen if you get to the 31st of March and you put your hand up and say, well, actually, I can't pay that VAT. You know, I don't know. I don't know what the government would do about it. They're not going to tell us, are they? No. Because if they say, well, we're not going to aggressively collect it, people will just take a view that, well, maybe I never have to pay it. Or there'll be penalties or interest. I just don't know. But yeah, cash is crucial. Having a business plan, knowing what you're doing, controlling what your staff's doing, controlling whether they're working. I'm talking as a service industry, obviously. You know, controlling whether what they're doing is profitable, making sure your client can afford to pay you. Don't do any work unless you know that your client's got the money to pay you. That's, you know, because working for nothing in this, everyone takes business risks and does a bit of speculative stuff. But where we are at the moment, I think, you know, working for nothing it will be an absolute disaster because you've paid your staff, you know,
do you think
work and you don't collect the money from the customer, and you know, it's just a write-off and it's gone.
Do you anticipate seeing then that people that are in those supply service type roles, that they would be asking for upfront payments more than, because that sort of used to be the norm and then went, didn't it? So do you see that coming back?
No, I think people will just do more due diligence on, you know, the credit rating of the business. You know, if you're an accountant and someone asks you to do their job for the first time, you know, you're looking at their last year's accounts, they're telling you all about their business. So it's quite easy for us, isn't it? Because if we see that, you know, someone's right up to their overdraft limit and they're not making any money, we probably don't want to do the job. Because we'll do a set of accounts and we potentially won't get paid for it. It's much harder for, you know, other businesses because credit information is always out of date. It's vastly out of date, isn't it? I mean, the Companies House said they deferred everyone's accounts by 3 months, didn't they, John?
Yeah, up to June. So if they were due up to June.
So, you know, stuff is now, you know, so if someone had a June 20 year end or June 19 year end, it was June 20 then, wasn't it? So everything's a year. So I've got a client with an August, and it's August, yeah. So they get 12. So everything's a year out of date before it gets to Companies House anyway.
Okay, well, let's open up for questions. Has anyone got anything that they'd like to ask or make a comment on? Go on, Kevin. You need to unmute yourself.
Yeah, I always have to make a comment, don't I?
Good.
Thanks very much for that. Very interesting. A couple of points, I suppose, things that I've always tried to build relationships with my suppliers, and I think we're looking after each other is sometimes a useful thing to do, and sometimes and this, I'm not saying everyone, but you know, I do genuinely believe that we should work with each other and support each other. And my key suppliers, I would do a calculated risk and do something that I maybe shouldn't do at this time, because I know that they've supported me in the past. That's just an observation. The second thing is that
Kevin, can you just say what your business is, because not everyone will know.
I've got a little coffee shop in Colliers. Yeah, sorry.
Sorry, I missed that, Kevin. What?
Coffee shop.
Coffee shop.
Yes.
So you're a cash. You don't have to give your customers any credit, then, do you? You're just.
No, but I have suppliers that are struggling.
Right.
And really struggling. So small little suppliers that. So yeah, you're right. It's not. It's the reverse for me. You know, people. Some of my. I've had one supplier who's particularly struggling, who's very important to me, and we're talking about how we can help each other.
Well, I think that's very important, really, because you want to keep that relationship. If you can help each other out by maybe, you know, you just spread it a bit further, don't you? You say, well, you know, I'll give you X pounds a month rather than nothing. Then it helps everyone.
Yeah, help them. But yeah, so the other thing is that I have. I think the word agile is really. I think you used that as the word I've been using all the time for the last 3 months, and we are looking at everything that we do every day. and understanding what we, and one of the things we've done, because we just feel it's the only way to survive, is to invest. You know, I bought more equipment than I have spent more money on equipment than I have in the last 2-3 years, because I think, you know, if you look at I'm not going to bore you with my particular what my customer needs and wants, and I have to evolve to provide that, and therefore I've got to invest to provide that. Because I do think this is going to go on a lot longer than people are saying, and I think the government seems to have this strategy of telling you things a couple of weeks in advance. And then they're telling you long-term in advance as well. You mean, they were talking the other day about over Christmas, the second spike. So they're already talking what they think is going to be happening, sort of feeding it to us. So although we possibly don't realise that. Yeah, those are the 2 points I suppose I would want to make. I've got another point, but it's not necessarily. Maybe it's any other question at the end.
Yeah, you can always ring me up anyway and talk to me. But
it's actually, I'm sorry, it wasn't in the context of what you said, but I think this is in the context of what the council, a non-financial kind of support that we need from the council. Do you want me to give the example? So,
yeah, go ahead now. Yeah.
I don't know whether you've seen the London Streets programme, which the Transport for London are doing, where they're basically going right out of going on the main transport link straight through, turning loads of bus roads into bus lanes into cycle routes, blocking off parking for all the local high streets, so local businesses can't have people stopping and parking. And you know, Sarah, I spoke to Mark about this yesterday, so he's aware of it now. But they're going to basically take away a whole load of opportunity for people to stop and shop. Not necessarily me, but the rest of Collingwood High Street. And they've done no consultation, so it's sort of, they're not thinking. What they're saying is, oh, once we've done it, tell us whether it's right or wrong. And I think we need this would be a classic example of the council could really work positively with the local businesses to support them. That was my third one.
Sarah, do you want to come in on that?
I'll take it back, Kevin. Paul is responding quite quickly to the needs of the transport issues and widening pavements, the social distancing, trying to encourage people to use cycles locally and move away from the car. But yeah, obviously we need to carry out some consultation with the businesses to establish what's working, what's not working. I'll take it back. I'm sure that's not the fine. This was a temporary measure anyway at the time. All of those things that have been implemented are all temporary. So yes, there will be opportunity, I'm sure, for consultation with businesses, and I will push for that too.
Thank you, Sarah.
Mark's been very supportive as well. Mark as well, I would say.
Yeah, great.
Yeah. Okay. I mean, I'll just give my take on that. I think, you know, the council does largely what the government asks of it. We have this very big label called a green recovery, and the thrust there is to keep people doing active travel and not driving. So that is the whole strategy that's being passed down to local authorities by central government. On the other hand, we have this reduced consumer confidence, which we've heard about. People want to go places in their cars, they want to go to work in their cars. So and businesses demanding more car parking, and that's, so they are conflicting strategies, and that's where we are.
And it's not really impacting me, but it's just a load of local businesses that are reliant on people, plumbers, you know, people like
being able to stop. Get that. Yeah. Okay, let's get back to the financial bits. Any other comments, questions from anyone? I mean, I think for me, the finance side is always difficult. I think, Julian, it's about how you, you know, you've said that you've got to do cash flow all the time, but there is also, isn't there, how you reduce your costs and bring in more income without getting to a state where you can't actually run your business to the standard and service quality that you want to. And it seems to me, from what I'm observing, that quite a few businesses have actually taken this time to invest and upgrade their service offer, which I can see makes a great deal of sense. The challenge for them is they've got to get the revenues coming in to get them back to full business and paying back those investments. So have you got any tips around that?
I mean, if you have invested in stuff, obviously the sooner you do your accounts, your numbers and whatever, the sooner you can get tax relief on those investments that might save you a bit of cash flow, because you can write off all your assets in the first year of purchase. I think what people really should do is literally just look at their profit and loss account, and and every other day just pick a line and say, I'm going to see what's in that, and decide whether going forward that's what they're going to spend on that particular heading, whatever it might be, and what is relevant, what isn't relevant. Will the business still continue if you stop spending loads of money on marketing, or maybe you should be angling your marketing in a different way to what it is now, and just look at the big costs to your business, because we all know, don't we, if you make a 20% margin, you've got to, to pay £20,000 worth of cost, you've got to turn over £100,000. Well, if you could stop those £20,000 worth of costs, which might not help smaller businesses and things. I mean, that's the downside to that. Then you haven't got to do that extra £100,000 worth of turnover. So I would recommend everyone looks at those costs. And people be surprised that when people are making reasonable sums of money, they get a bit flippant's the wrong word, but you know what I mean. They don't actually, they're making budget, they're making over budget. These are the figures. Everyone looks at the figures. The figures are bigger than budget, so no one actually really looks behind it. So if you're still doing well, you should still look behind it and say, well, do we actually need to spend that?
Yeah. Okay. Let's turn to Claire and Helen then. So, word on what you're observing in the South Wimbledon business area, Claire, and Helen in Wimbledon town centre. Are you getting a sense that businesses are back and investing, or some of them are running very well? Claire, do you want to go first on that?
Yes.
Yeah, welcome.
Thank you. Again, it's still a little bit unclear from our point of view. We do have, there obviously are some of our businesses who actually haven't done too badly throughout the whole of lockdown. We've got quite a lot of businesses who are in the events and hospitality, suppliers to the hospitality and retail sectors, and they are really, really suffering. They're having a dreadful time because literally everything stopped from day one. So they're going to be, I think, taking a very long time to recover if they ever do. We've got a real mix of businesses. We've got a lot of very small, one-man band type businesses, which, as far as I'm aware, are struggling on. But I don't really have very much of an overall feel as to, what the future is going to hold in 3-6 months' time. We might find that they're still in the same position, or some of them might have gone. Some might be doing a bit better than they thought they would. So it's a bit of an uncertain one, really, to be honest, Diana.
Yeah, no, I get that. And I did drive around there only the other day, actually. I didn't have a sense that it was empty. There was still plenty of cars there and people walking. So business is obviously still going on. And as you say, there are an awful lot of small hidden businesses on that estate, aren't they?
Yeah, absolutely.
Helen, how about in the town centre?
Yeah, we have about 75% of our public-facing businesses have opened so far, which obviously leaves about 25% that haven't. We have about 12 casualties at the moment who will not be reopening, some independents and some chains, so there's no consistent story amongst that, but nevertheless, our vacancy rate is going to go higher than we've ever had it before. So we are looking at actively working with landlords on that because, of course, let's not forget that retail have the business rate relief up until the end of March, which works for landlords for 3 months as an empty property relief, but actually after that, that liability reverts back to the landlord and they will have to pay those business rates. So there is a real incentive for us at the moment to be working with the landlords to work with those empty properties to get them occupied, even if it's for a peppercorn rent, because actually that reduces the liability on the landlord. So we've got an interesting situation there that could be really advantageous for small entrepreneurs, early businesses, startup businesses, anybody who's wanting a bit of meanwhile use to actually look at how they can utilize that time. Having said that, footfall is still at least 50% down on last year. And that's not just the tennis peak. It is, you know, we're only increasing sort of 4 to 7% each week at the moment. We are still very much missing our office population who would really keep the town centre alive. But even at weekends, we're not getting anywhere near back to where we would have done with the residential. So there's a lot of issues with consumer confidence out there that's preventing this. Restaurants are actually doing reasonably well. Those that have reopened, as far as bookings are concerned, they've done well in occupation. But of course, as with social distancing, as Julian was saying earlier, you know, that capacity issue is really hitting them hard. So I urge you, if you do make a booking, please keep to it, because obviously they can't be turning people away. And then other people not turning up, which has been happening quite a lot from what I'm hearing in the industry. I haven't heard it happening locally in Wimbledon. So it is a mixed picture across the board. We are doing everything we possibly can to promote our Love Local campaign. And, you know, there are some queues developing in some places, but they're moving quite rapidly. So don't be put off if you see a queue. They are processing them quite quickly. So yeah, that's all we can continue to do at the moment, is just keep working with those businesses that are open, keep supporting those businesses that are looking at coming back. Obviously all the gyms reopen on the 25th of July. They are absolutely up and ready to go. They've installed extraordinary measures with perspex around every single bike and HEPA filters in the air. I mean, they've absolutely gone beyond to make sure that consumer confidence is strong when you walk back in there. So you've got to take your own towel. So not sit there if you do go to the gym.
Yeah, but presumably, I mean, as you say, that investment, presumably, Julian and Jonathan, these businesses must have taken advantage of the bounce back loans or the CBIL loans or whatever. So they've got to get the business in, haven't they, to be able to repay on that.
Yeah, all the shareholders have invested in it, or, you know, the owners have invested in it, but see it as long term. You know, same as Kevin with his coffee equipment, you know, seeing it as a long term investment.
Yeah,
you know,
I mean, for an investor, you might get a cheaper investment at the moment. You know,
sorry, John?
you can get your investor relief in the future. It's only 10% tax, so it's quite a good time if you are an investor with cash to maybe pick up some bargains in terms of investments. I mean, most people should be using the bounce back loan, really. It's not free money, but it's as close you're going to get from a bank to free money. Even if you just don't use it, but it stops you using your overdraft as much.
Yeah, I know. Sorry.
I would say that, well, the key is going to be the January-March time, as Julian said, because it's also the March corporation tax payment on the 1st of January. And March was a normal year. And March is the most common year end. So most people will have the same as usual or bigger profits to March as they always had. And that tax is due 1st of Jan. Now, no one generally saves 20% of their turnover in a separate bank account ready to pay their tax a year later. So that's paid out of future money, which has gone down a lot. So there's a lot of work around that. whether they want to extend their year end to September, 18 months, to include all the loss period, to reduce the overall profit for the 18 months. There's things you can do about that. Maybe they shorten the following year, so they accelerate the tax losses or the tax, the lower profits. Because they haven't said at them, even that they'll do anything about the January corporation tax payments. There's also a lot of hidden tax in the help, the business rates, the small business rates grant. I think Sarah could confirm, but it was due on where your business was on the 11th of March, which means it goes in your March accounts when you didn't get the cash till April or May. And a lot of people haven't. The £10,000, the £25,000 is taxable in March. So again, that's going to be taxed in January, 12 months earlier than a lot of people think it will be taxed. The job retention scheme, furlough money is taxable.
Jonathan,
all of those things are taxed.
Would that apply if you were doing a cash accounting approach? If you didn't receive,
yeah, for
you would.
Tax is
for tax. Okay.
Tax is always accruals.
Right.
So
okay.
if you, so that £25,000, we've got an estate agent with, if you've got an estate agent with 5 properties.
95 he got back because he rang me up.
£95,000.
£95,000 in my bank account. What's that for? He said.
Yeah.
Wow.
That's a little present from Sarah and her colleagues. Yeah, but that 95,000, he thinks he can spend 95. He can't. He's got 80.
He spent it.
20 of that is due in January. Unless, or you could. So there's a lot of hidden tax. The self-employment, like £2,500, all taxable. You only get 1,700 of it. So a lot of this stuff is going to end up being taxed earlier, I think, than people think. Paid out of reduced turnover potentially. So they need. So it's the push is really when things get a bit more back to normal around September. It's going to be a big push through to March, because if there is a second peak as well, then you've got no cash at all to pay any of these tax liabilities, really, and that's going to be a disaster. Really.
Yeah. So I think the message is you need a good accountant to take you through this, don't you?
Well, the other thing is that if the restaurants and things do reduce the price for the VAT, and so if they pass the VAT saving on, they've now got reduced turnover to pay the VAT they've deferred over to January. So it's all sort of builds on itself. You'll be very careful. Yeah.
And lots of clients that we've got forget what they've borrowed. They forget they owe the VAT because it's convenient. They forget that they didn't pay the pay-as-you-earn on the staff, but obviously they got furlough money back on those staff. Yeah. So and you were allowed to. You had to ring up to defer your PAYE. It wasn't automatic, but the government haven't been aggressive in any way in chasing PAYE. So if you start putting the PAYE and the VAT on the bottom of their cash flow, it goes a bit negative.
Yeah. I mean, I'm smiling because we've always said there's a big conflict, isn't there, between someone that is enterprising by their very nature, which many business owners are, and then this sort of cautiousness and accuracy of the financial management. They don't naturally sit together, which is why you need people like you helping you.
They don't go together at all. You're quite right.
Yeah,
even some partners in firms of accountants don't see it either. Not Jonathan and I hasten to that.
I love that. Good. Okay. Have we got any other final questions or comments? I think that today it's just really illustrated we are in very tricky waters, aren't we? And I think you've really helped us see that we have to manage cash, and we have to be really aware of the liabilities that we have to pay out at those times that you have said. So that's really helpful. And we are doing another session next Tuesday with Morrison Solicitors and Sarah from the council on HR and the announcement that Jonathan mentioned on the employment initiatives that the government has announced. Again, local authorities are playing a pivotal role in bringing the government strategy into the localities. So we're looking at how that will be rolled out. So some more information coming on that. If you are interested in taking on young people, apprenticeships, traineeships, and just helping people get back into work. There is employer support coming through on that, so that's what we will be looking at. Good. I think we'll stop there then. So yeah, as Caroline's put up there, please keep in touch. There's we're still continuing to put out the information. Obviously Hartley Fowler there. Merton Council have alongside Love Wimbledon doing the shop local, and they have a section on the website about that, and encouraging to enroll in different websites that raise your profile for people knowing what's going on locally, and obviously with Love Wimbledon, the whole shop local, and indeed across. We've always said at the Chamber of Commerce, this is the time to act local, shop local, think local, because it is our localities that need our support, and I think that will be a future strategy for some way ahead. So yeah, I think that's great. So unless anyone's got any other points, final comments? No, we'll say thank you to Julian and Jonathan for that really insightful and sobering approach, I think, to business management.
It's a bit early, isn't it? It's a bit early to start.
Very necessary, though. Very necessary. And thank you to all of you for participating. We will share the recording, and yeah, hope to see you all soon at something coming up. Thank you all then. Take care for now.